Do people struggle so much when they're day trading the markets? Maybe it's because they enter a trade too late. So on this video, I'm going to show you a cracking day trading strategy that you can use that produces low risk and high rewards. Let's dive into the charts now. Okay, so let's dive into this day trading strategy. I've been working with this strategy for 20 odd years, and I want to show you what to do because I think it's a great day trading strategy. I hope it helps lots of people because it's helped me for many years. And one of my students yesterday went on to make $3,500 trading exactly this trading strategy. So let's dive into the components of what this is all about. Now, the first thing you want to do is identify where the momentum of price is going today. Now, I see a lot of people coming in and saying, as a day trader, well, the trend on a market is up for the last 3 months. Okay, but that is irrelevant to what's happening today, because today the trend could be down, but the price is up. So I think day traders look back too long. I want to know what one candlestick is going to do today. And I would like it to be in the morning session, in the golden hour, as we run from 7 a.m. to no longer than 10 a.m. in the morning. So that's the window of opportunity. It could be less. This is great for you day traders that are having to go to work at 9 a.m. or start work at 9 a.m. in the morning and need to get some profit in the bank. So I want to start with one time frame that's bigger than the one I'm going to be entering the trades on. Now, that's going to be the daily chart to start with, because the daily chart has wide ranges. Okay, so I want to know where today's candlestick is going to go. Now, we'll look at DAX in a minute because today's candlestick is going to be up, so I'll be looking for trades long in that. Before we dive into the details of the strategy, guys, don't forget to subscribe to the channel. Give us a thumbs up if you like this strategy. As I said, it is called the Porsche trading strategy because one of my students several years ago went out and bought a Porsche, a bit flashy, for making lots of money with this strategy. Hope you can be successful with it as well. So the daily chart can be used, and we call that the bias time frame, or you can use a 4 hour, or you can use a 1 hour. But a 1 hour one candlestick bias is only going to last probably 1 hour, maybe 2 hours, where a daily candlestick bias can last all day, like gold did yesterday. So here we are on the gold market, and you can see here that yesterday we had this big, it looks like a yellow candlestick. It is because it's on our system telling us the price is going to reverse. Momentum was rolling over. Okay, so we knew gold was very much overbought as we come into the trading week. It was Monday, by the way. So if you get a long weekend, okay, and then the markets are overbought, it's likely to sell off first thing on Monday, and that's exactly what we got. So you need to pick, as step number one for this strategy, you need to pick where the price is going for today. You know, if I was getting momentum pro trading system up here on gold, like we were long the markets. Like a trend predictor, the next day we were long the markets. But when price gets overbought, you can see a down day, and I'm prepared to risk money to take trades to see whether I'm right or wrong. Okay, so the first thing you need to do is identify where that price is going to go for one candlestick. And if you're using the daily, you could be trading it all day long if you wanted to, which I don't advise, because I advise you to take a break at lunchtime and then come back for the afternoon session. Okay, so we think the market's going to go down because we've done some analysis. Now it's time to get into the trade. Now, we drop down multiple time frames here. In this case, I'm dropping down to a 5-minute chart. Now, I could go down to even a 1-minute chart underneath the 5-minute chart if I want to get even a tighter entry and good risk reward. But just for this video, I'm just going to show you how to use it on a 5-minute time frame. Now, on the left hand side is that 5-minute time frame. Now over here we've got an indicator called our Pro OBS. When it gets into the red, it means it's overbought. So you're going to need an oscillator of some sort, and maybe an RSI or stochastic or something like that. When it goes up, the stochastic, when it gets into, because we're shorting it here, when it gets into the 80, then you might want to look for some short trades when it comes to
to that. Okay, so I've jumped ahead a little bit. I just want to go back here. So we know that there's about 72% of traders lose money because the brokers tell us that on a regular basis. Okay, now we don't know it's all day traders. It could be swing traders and all sorts of traders that are losing money in part of that 72%. But I think one of the components and the reasons why day traders in particular, lose money regularly is because they enter too late in a trade. They chase the market. Look, we've all been there. We've all done it. So, you're not unique if you've been getting into trades too late. You need to flip that, guys, and do the opposite. And I always go back to golf and the analogy of golf. The harder you try to hit a golf ball, the least distance it goes. The softer you try to hit it, the further it goes. And with trading, I think when you're trying to buy something that keeps on going up, you get into the trade too late and it pulls back. It has what we call a reversion back to the mean. And what we want to be doing with this strategy is, number one, identifying the trend or where today's going to go. And then we want to be doing the opposite, i.e. we don't want to be short in the markets. And this was a short trade that my student was taking yesterday. We don't want to be short in it here and here at the bottom. You're eventually right because you've got the bias right for today. But why not short it when you get, and that's very early in the morning, but when you get these high OBSs, when you get those high readings in the red, okay, why not start to think about shorting it in there? You see there's lots of them there. And I only would advise my students to take 3 to 4 of those in a sequence. So what happens is this, okay. Now, we'll identify that this could be dropping and it could be a long trade at any time that you might be, and I'll show you the DAX one in a second. But as the market starts to push down, the daily time frame is pushing down. We see that the 5-minute chart is dropping down. So don't enter as it's going down. Wait for the pullback. Wait for the pullback. It is, and you'll probably agree here, waiting for a pullback, a retracement back to the mean, is probably one of the hardest strategies to take. Why is that? Well, because as it's coming up here, we're looking to short the market, and you're actually looking to short something that's rising for that brief moment. It feels uncomfortable, but it's normally the best time to get into a trade. When it feels easy to get into a trade at the lows here, it's normally the worst time to get into a trade. So if I can wait for that high OBS reading, if I can wait for my oscillator to get over bought in a down move, then I can start to get into the trade, trigger the trade to the short side, have a really tight stop, and get really good risk reward. So you can see here as the price goes up for a couple of candlesticks, you see there that instantly it drops and you're short the market in here, not here, and you're instantly in profit. And what this strategy does, it allows you to get a stop to break even quite quickly. And if you can get a stop to break even quite quickly, then you've got a risk-free trade. And I always say, when price moves quick, you move quick, i.e. you move your stop when price moves away from your entry quite quickly. It's important to do that as a day trader. Now, some people will say, well, why don't you just leave the stop where it is? You could do if you've tested that and that works nicely. But for me, when I'm day trading, my job as a day trader is to get riskless as soon as possible. I want to make sure that I can't lose money on the trade. I don't want to choke the trade. I don't want to get the stop too tight, like 3 points away, and it spikes me and then it goes. I want to give it a bit of distance. Now, a stop placement could be behind a 20-period moving average for this strategy. So remember, we want to identify where the momentum's going, and then we start to look for overbought signals in our oscillator. Okay, so here on the Pro OBS, we've got overbought scenarios. And all day long, I spoke to my student this morning, all day long, he just said it was so easy. Every time it rallied back up on the 5-minute, I started shorting it. Every time it rallied, I shorted it. And he had his stop nice and tight. That was a really nice move. Now today, let's take a little look at the DAX, because that's been an interesting one today. The DAX has been nicely up. And I want to show you what this trade was here. Now, for me, it was all about just looking at this. You see the 1 hour time frame. And as I said, the more skillful you become, the more experienced you become, you can add multiple time frames here. So you could have on your chart, so I've got 6 screens at the top here. I could have, well, I have, you know, the daily sitting over here with the weekly, the 4 hour at the top, I've got the 1 hour here, and I've got the 5 minute here. So now I can just glance. I've been doing this for donkey's years, guys, but I can glance to see, okay, we've got room to move on the DAX to the upside. We've got room to move on the short to the gold, back to the moving averages. So now I'm trading in the path of least resistance. All right, so path of least resistance could be a break above moving averages. You could be above moving averages, and that works really nicely. When price is above moving averages, it's got room to go. Where's the resistance? There isn't anything above, okay? So it can break out and push higher. When price gets stuck inside moving averages, when you get the 200 coming down on top, the 50 coming up underneath it, or the 20, it gets stuck. There's nowhere for it to go. Ignore that market, move to a hot market that's got room to move. So you can see here, DAX has got room to move on the 1 hour, all right? It's been nicely green on the Pro Trading System on the 4 hour time frame today, and it's got momentum up. I only want to be looking for long trades. I only want to be looking for long trades. So you can see here, the 5 minute chart, we get a breakout of the moving averages, all right? Now, this is the important bit, the OBS in the green. When it comes down into the green, for some traders, it's going to feel really uncomfortable to buy it. Now, it closes in the green. So once it closes, you want to buy it straight away. Well, how do you know when it's going to close? Well, I use a little timer here. 1 minute, 52 seconds it's saying at the moment. It's working here in real time. Because it's a 5 minute chart, I know that every 5 minutes I could have a setup, okay, or a signal. In this particular case, and it was after the hour of the golden hour, which runs, you know, up until around 10 o'clock-ish, we got the low OBS. So it's overbought, so I beg your pardon, it's oversold in a momentum bias to the upside. All right? Now, you might be saying, well, you know, why didn't you buy it here? Why didn't you buy it here? You could do. That's another strategy. But this one is the Porsche strategy that I want to show you. And a lot of the time, it just goes up and it pulls back. And when it pulls back, I get my oversold reading. It's closed. So my candlestick now will be starting a new 5 minute candlestick. So that's now my time to sort of get into the trade. My stop is below the next set of moving averages. So my risk reward here is excellent. So if I'm going to have a entry here, my stop is around this area here. Let's just drag it a little bit lower, below the moving averages right there. I'm risking on the trade, it's 988 at 977. So we're talking about a 12-point stop. And let's look at what 2 to 1 would look like, guys. And if I deleted that accidentally, let's go back and do that one again. Let's put our stop in there. Let's duplicate that in right here. Right here. Let's just go and get a copy of that one. So let's go copy it. So if that's the entry, and it doesn't click into place this box, but roughly, let's say that's 1 to 1. And let's copy it again. And right there is 2 to 1. And let's go up a little bit higher to make it fun. That's a 3 to 1 risk reward ratio. So if our stop place, if our entry is here on the close of the signal, so once it gets in there and it closes, I buy it straight away. There's my stop placement under here, which was 12 points. There's my 1 to 1. There's my 2 to 1. There's my 3 to 1. And you could just use Pro Trading System until it turns red here to run a bigger profit on that final position. So you can see here that what we're trying to do in this setup is we identify a nice strong market on any bias time frame that you choose, that you feel at your level, whether it's the daily time frame, you think the day is going to go up, you're going to be buying each of the low OBSs. So when it gets down to here, you want to be buying it, okay, on the close. You can use a 4 hour or a 1 hour if you choose, but you've got to remember it's only going to last. If it's a 1 hour, it might just last for 1 hour, the bias. With a daily, it could last all day long. So when that happens, okay, then you're looking for the close. You put your stop in place. Risk reward is great on this, and then it pushes up. So what you're trying to do, and I'll draw it out for you, up on the 5 minutes, okay, you're patient, be patient, don't chase it. Remember, a lot of people are going to buy the highs. Price action will naturally have a pullback, so it comes back down. It feels moving averages are under here. It feels uncomfortable. You know, your belly's starting to go here. Why am I buying it? Some people, in fact, one of my student made the money. He really enjoys buying the pullback because he gets in profit much quicker. So you buy it on the close. Make sure you got your timer working. You got your low OBS, pro OBS. You buy it. Now, if it carries on going down, you're stopped out on the trade. All right, that's fine. Risk reward is great. You are going to get stopped out on some trades. But look, you want it to bounce, and very often it will bounce and you'll be in profit very quickly indeed. Then it pulls back, comes back in here. You watch your timer. Okay, it closes the candlestick. It closes with the OBS. Oversold. You buy it. Push. This is exactly what happened on gold yesterday, but gold was the other way round. Remember, gold was the short side. So we had the short bias. It came down. We didn't short it. It rallies. We get the overbought scenario on our indicator. We short it. Okay, down it comes. We short it. Down it comes. We short it here, here, and here. We don't short it here. Risk reward's rubbish. I mean, if you short it down here, up, down. If you short it here, you're standing in the way. Unless the whole thing collapses intraday, you're standing in the front of the next pullback. So if you're shorting here, we're going to have a pullback at some point. Your stop placement is what, 10, 12 points away on average? Well, you're going to get stopped out. Okay. You want to be shorting it here with a tighter stop and then selling it, banking it down here. All right, just think about where you're banking it. You're banking the profits, literally where a lot of traders are getting into the trade. Do the opposite. Do the opposite. And you'll find that if you do this on a regular basis, it's great for, I would say, scalping. But scalping doesn't mean taking 15, 20 points out of a trade. Scalping goes back to the old days where you would buy on the bid in shares in the US and you would instantly put your order to sell on the offer, bid in the offer. That's scalping. And I hear my students coming to us for the first time saying, well, they've been taught scalping. This is called scalping. It's not scalping. Scalping is buying on the bid, selling on the offer, okay, with shares on the level 2 screen years ago for, you know, small amounts. All right, so keep your eye on that. This is day trading. This isn't scalping. This is going for, you know, 15, 20 points on some of these trades, especially on high volatile markets like the German DAX here. All right, so keep your eye on it. Step number 1, guys, find something that's hot and it's going to move. Use one of your momentum indicators that's a bigger time frame. So let's go and have a little look at some others. Oh, this is great because I've just managed to catch one that is live here. And you can see that it's in the doldrums. It's now nearly 10 to 12 midday. So I wouldn't have taken this trade because it's doldrums trading. But look, we see that in fact, we're trading this from the 1 hour bias today because we were nicely green on Pro Trend system. Momentum's up. And you can see here the price comes down, all right, and we get the low OBS. So right here, okay, now look, there's your entry on the close. Now the entry was 65. It's now trading at 71. You're instantly in profit. If you felt uncomfortable about this trade, I would now just move my stop to break even. I've got no losing trade. Look, if I buy up here or buy up here, I'm too late. I'm buying it on the pullback. Now you don't know how far it's going to come down, but the key is, as it comes down, You wait for that timer to close it oversold, and then you buy it instantly. All right. So you can see here it working quite nicely in the doldrums. Imagine if you're doing this every day, finding the hot markets at 7 a.m. in the morning until the doldrum starts to kick in late morning, where that injection of volume comes into the markets, where all traders in the European session are trading, day traders that are trading that session. You could do it in the US session as well, okay? It's the pullback. It's the reversion. For us, it's the Porsche trade strategy. This is what we like to do. It feels uncomfortable, but I'll tell you something, guys, it is so profitable. The risk is so small and the profit potential is so great. Now, it's important that we break above this high here, which is the recent swing high, okay? It's important that we do that. Now, it's probably going to stall a little bit here, but I think it will eventually go above this area. Now, has it got the volume? It might not have the volume because we're in the doldrums. But the recent high is really important right here because I want to see it make higher highs. I think it will do. I think it will get up to this area here, 308 today on the 1 hour time frame. All right. So when you get more experience with this strategy and you get it working for yourself, as I said, you can go down to 4 hour and 1 hour time frames. You can use all sorts of bias, as we call it. We can use our systems. You can use divergences. You can even use this with a bias of a monthly time frame with a daily entry when it gets that low OBS reading. All right. And it works incredibly well. It just feels uncomfortable for day traders to take it. A little push on the NASDAQ above. We need a close. The close on a candlestick is more important than the range of a candlestick. So a commitment of a close when you're trading, guys. Always remember the close is more important than the range of a candlestick, especially when you're in a trade trying to look at if you're going to get out of a trade. If it closes nice and high here, this candlestick, the commitment is to the long side. If it just comes back in here and the close is way down here, where the sentiment for that candlestick is a little bit bearish. Okay, all right. So really nice. Your job now is to go and test it. Find a bigger time frame. Put two charts together like this. Literally find out what you want to use for your momentum. You see the close here was below that range. So what you would do there, you might want to just move your stop up to break even or bank maybe 4 points on the trade or something. If ever in doubt, sell half your position, okay? Especially if you're using 1 minute, 5 minute charts, they can come back and get you. If you're ever in doubt when you're in a trade, if it starts going against you, then bank half your profits, move your stop to break even. All right, at least you're protecting your trade. All right, guys, hope it helps. Hope you like the video. And, I've been doing this for, as I said, I've been doing this for a long, long time now. And I see traders just entering so late, buying breakouts in the FX market. It's just so wrong. You get stopped out on the pullback, where this gets you into trades much quicker. And look, if you feel uncomfortable when you're in it, get that stop to break even, all the stress disappears. But you do this 3 or 4 times a day, finding those hot markets, you will soon rack up those profits. Don't forget to subscribe to the channel, give us a like on this, and don't forget, I've also got a free course, a free beginner's course in the description below this video. It's completely free, guys. Give it a go. There to help you. Take care.